Hi, how are you doing? Mathis Connor here with Connor Management Group, and this week we're going to look at the best technology stock to buy right now. Today is Thursday, December 5th, 2013. And starting off, we can see that this company is in the printed circuit boards business, and we see its 12-month upside potential at 53.5%. Going on to the next slide, and we see that the name is Flextronics International, ticker symbol FLEX. Now, Flextronics International provides design and manufacturing services to original equipment manufacturers worldwide. The company offers design and engineering services, including contract design, joint development manufacturing, and original design and manufacturing services. The website is at www.flextronics.com. That's FLEXTRONICS.com. This company is headquartered in Singapore. It was founded in 1990, and the number of employees is 149,000. So this is definitely a company of some size, and I'm sure it surprises quite a few people because it's a sizable company and it's not a household name. Once again, the ticker symbol is FLEX. It's in the technology sector, and its industry, once again, is printed circuit boards. So, they don't sell to the public, but they sell to the manufacturers, the names that are very much in the public. And to give you an example of how large this company is, the annual revenues for the last 12 months has been $23.6 billion. So they're definitely a company of some size. The net income over the last 12 months is $183 million, and their cash from operations has been $941 million. The market cap of Flextronics is at $4.8 billion. As mentioned, Flextronics, they provide electronic solutions to a lot of original equipment manufacturers. So here on the products and services page, you really don't have any photos really showing that. On this page, you have their company logo, Flextronics, and then you have a couple of slides showing they partnering with creators of clean energy products. Another picture showing with a logo saying we provide manufacturing solutions to the agricultural and dairy markets, and building appliances and white goods for leading brands, and another providing manufacturing solutions for the consumer market, with a picture of their worldwide operations. Just to give you a size for how big they are, they have a network of facilities in 30 different countries and on 4 different continents. They're in Europe, Asia, South America, and North America as well. About 50% of their sales, by the way, is in Asia. 31% is in the Americas, and 19% of their sales is in Europe. Also on this slide is a picture of the leadership team, and their CEO's name is Michael McNamara. Going on to some of the key metrics, once again, the annual revenues of Flextronics is $23.6 billion. The net income, $183 million. The operating margins for 2012 was 4.7%, and it's essentially been flat. And the operating margins for 2013 is 4.8%, and those are expected to increase slightly over the next year or so. The cash from operations, as stated earlier, the last 12 months has been $941 million. Going on to some of the valuation metrics, the trailing PE ratio for Flextronics right now is at 27.7. However, their forward PE ratio is expected to be 7.6. So that implies quite a bit of expected earnings growth and future analyst forecasts for the company. and it's part of that earnings growth is why we think that this is a good buy and can get some substantial price appreciation over the next year. And also, the rest of the valuation metrics are not rich at all. The PEG ratio right now is at 0.8. The price to sales is at 0.2. That's pretty low. And the price to book is at 2.2. Similarly, the enterprise value to EBITDA ratio right now is at 6.0. So while there's a slightly rich PE ratio, trailing PE ratio right now, the rest of the valuation ratios imply that this company can be considered undervalued based on present levels. The recent closing price of Flextronics is $7.33. The 52-week low was $5.77, and the 52-week high was $9.71. So it's somewhere right in the middle now between its 52-week high and low. The 20-day moving average was $7.60, the 50-day $8.40, and the 200-day moving average $7.88. So that does not imply any immediate price appreciation, but as we'll see, and I'll describe to you on the price chart slide, that the price has kind of gone up and down, but overall it's been up for the year. The average volume for Flextronics is 5.2 million shares a day. So the company has a healthy trading volume. The beta is 0.97. So this is not an overly volatile stock. It's tended to move with the market. And the dividend yield right now is 0%. Flextronics definitely has kind of got a growth mode profile that they're not paying out any dividends. Over the past 5 years, the average sales growth has been between 5 and 6%, and it's expected to pick up a little bit going forward, as well as its earnings is expected to pick up a little bit in the next 2 to 3 years. So on to the Flex chart, the price chart for Flextronics. Back at the beginning of the year, on the end of February, the stock was around $6.50, and from there it moved up somewhat steadily to a high of around $9.50 in mid to late August. From there, the company bounced around a little bit around that range, and then it dropped precipitously in late October and came down a little more, down to the $7.58, about where it is right now. I did some digging to find out what that drop was about in late October, from around $9 down to below $8. And essentially the company issued some guidance about sales and earnings. And basically it told Wall Street that, look, our sales and earnings outlook are not as strong as we previously projected. And from what I can tell, Wall Street just kind of overreacted and sold off quite a bit of this company. I mean, it happens. I mean, you're an executive with a company and you want to control expectations and prevent a hard crash. But unfortunately, sometimes the market will give you that crash and that pullback right now rather than later. So although the company's pulled back, and right now, it's around $7.50, it's still above the $6, around the $6.50 back at the beginning of the year. And we view its outlook as positive. So yes, there was a pullback, but we think that this company has quite a bit of upside. So the financial statement quality for Flextronics, it's good. The company does have some debt, but overall the financial statements are healthy. The operating margin trend is flat, and we expect there to be some improvement over the next year. Over the past year, they did quite a bit of restructuring, and they shut down a number of their manufacturing facilities to improve the efficiencies at their other manufacturing facilities, increasing the capacity utilization at those. Also, over the past year, they were doing some share buybacks. I'm not sure if they're going to continue to do that, but their earnings outlook is positive. So the price trend pattern for Flextronics overall, it's bullish. There was some pullback, but it's still above where it is at the beginning of the year. And our view of the market in general, it's still bearish. Right now we still believe that there have been some names out there, a number of stocks that are overvalued, and they tend to outnumber the undervalued ones. So overall in the market, we see right now can still expect some pullback. But for Flextronics right now, yesterday's closing price was $7.33, and our model, we see its 12-month price target at $11.25. So that's a 12-month potential increase of 53.5%. So, Flextronics, it's one of these very large companies you don't hear about, you're not hearing about it in the press, but by the numbers, it's clear that they're a well-respected company, they're sizable, and they have a lot of customers. And right now, we see this as a undervalued company and a really good technology stock to add to a portfolio right now, considering that we just view it as undervalued. So that's what we got for this week. Flextronics, we view as the best technology stock to buy right now. And on to our usual closing slide. If you haven't signed up for Content Management Group's Saturday morning emails and newsletter, please do so. You could be among the first to hear about new investment opportunities that you won't hear anywhere else. And these opportunities are driven solely from our own self-developed proprietary algorithms. I mean, we scan over 3,000 stocks and weekly and apply some pretty unique screening methods that we're pretty pleased with the results on. So just go to www.gmcstockpicks.com and sign up, and you can always unsubscribe with just one click. So that's all we have for this week, and talk to you next week. Take care.